Hello guys, welcome to the Trading Parrot. Today is the D-Day, the FOMC meeting, and we are expecting 25 basis points with 96% chances. There is a slight twist, potential for 50 basis points. We're gonna look how we approach the meeting in different indicators, where are the levels of support and resistance, if things are positive, areas for profit taking if you are in a long, and potentially also for taking a short. Guys, if you like this type of content, make sure that you're subscribed to the channel, hit the notification bell to get notified every time I put out one of these videos. And I remind you that just in about an hour, we're gonna have a live stream with Matt. We're gonna cover on-chain data analysis and Bitcoin from different perspectives using data from the Bitcoin Magazine Pro. Make sure that you don't miss it. Find the video in the live section in my channel and hit notify me so you don't miss it. Guys, if you wanna trade the meeting FOMC, or if you wanna trade any altcoins in the future and use a great exchange, Tubit is an amazing alternative. They offer non-KYC as an optional. You can get access to leverage, really great volume for trading, and is created by the same people that made Bybit, but with a KYC and non-KYC option available. As soon as you register, you get $50 for free, and of course, if you deposit and you start trading with your own cash, you can get all or part of the 30,000 trading bonuses. Let's have a look at some tweets. Polymarket is saying search for help with mortgage surpass 2008 housing bubble. That is just mind-blowing, and you know what happens after 2008. Just a data point to keep in mind, because definitely real estate can have a big step on the floor and make every other market shake with it. That sounded a little bit bearish, so let's compensate with this one. Is the high for 2025 already in? S&P has achieved 25 all-time highs in 2025. That's a lot, but never before has the S&P achieved 25 all-time highs in a calendar year without at least achieving two more. That happened in 1954 and 1959. 95% probability of at least one more high in 2025. And Red Capital is saying that Bitcoin looks to have successfully reclaimed 114k support. That is definition of a liquidity hunt. I prefer when it's just a week. We spend 1 to 2.5 weeks below that support on the weekly time frame, and now we are back in the middle of the range. What we need to do now is break the red line and confirm the breakout. You can see that throughout the bull market, it has been the best performing pattern so far. And CryptoQuant is saying that with the FOMC ahead, 9 constructive days of outflows from Binance. This trend appears to be a major driver behind Bitcoin's recent bounce from 108 to 115. The steady outflows from Binance may reflect early positioning ahead of this FOMC event. And if you're confused, an outflow from an exchange is something positive. It means that people are willing to put their Bitcoin in a wallet, which is less liquid, obviously, than leaving it in the exchange. Something else that is also kind of bullish is the $2 billion worth of stables that just got dumped into Binance. That means that the people have an appetite now for trading. That's why they are depositing that USDT that can be used for the open interest, for the futures traders, and for people depositing from banks as well that they want to buy USDT to trade. So the takeaway from this is expect big volatility, is 2 billion in stables. And according to ChatGPT, these are the 3 most interesting news for today, or the most impactful ones. Spot BTC ETFs log 6-day inflow streak, 2 billion in total. That's great. Dormant whales move 1,000 Bitcoin after 11 to 12 years. That is bearish. 4 out of 10, and 7 out of 10 is exchange balances drop 44,000 BTC in September so far. I always want to contrast these inflows and outflows as a ratio and then see it with Big Well Explorer, because those in particular are the ones considered the smart money, doing the things at the right timing. So these individual readings of outflows by itself doesn't tell me much, because there could be an inflow as well compensating, or it could be just a large sum of retail doing the wrong thing. So why would I care in that case? Of course, it's 44,000, so yes, it's a huge amount. We shouldn't ignore it. You can see here the actual news of Bitcoin well moving 116 million BTC after 11 years dormancy. This is from 2014. And as usual, I ask my Patreon community what do they want me to cover in the video. And the first question for today is, in which area are you looking for a long after closing your short? Oh my god, TTP is in a short. Yes, now it's public. I shared some details with my community this morning, noticing that I enter. What are the current updated indications that we may drop below 110 or 107. Lara is asking, I'm gonna look into that. I think there is motivation to go there for liquidity pools, but that is not sufficient, so we'll look into other indicators as well. The BTC dominance looks like it's moving up again. Your thoughts if it's likely to continue to drop? As I'm invested in alts, many people that are in alts are freaking out every time that the dominance comes up because it could do a lot of damage. In theory, some topics, what are the purple whales up to today? We care about them because they time very well when to enter in longs. We do not have a large amount of longs. We'll look into the order book later to see the detail on that. It's giving me a reading where we actually see closer to a local top rather than a pump, but we'll see. Your last minute guidance regarding today's FOMC meeting. Before all of that, let's have a very quick look at macro in general very quickly. Retail sales beat. So we have that tariff front hits up. We have some news coming from EU, China, US versus India, the usual back and forward, and geopolitics as well. The core macro specifically for US, the CPI that was last week with the PPI kind of mild to positive towards getting a cut, and that is giving the confidence to investors that we will get the expected cut later today, 96% of 25 and 4% of 50 basis points. Labor market, there was a discussion yesterday whether it was valid the readings that we've been getting with the jobless and initial claims, but this is where we are standing as well. If it's broken labor market, that is another incentive to cut, but if it's invalid the reading, well, I wonder if the incentive is as high as before. Policy update, the FOMC, that's what's coming today. The trade war snapshot, the tariff regime is kind of expanding and elevating, and that raises left tail risk. Why BTC is sideways? Well, pre-FOMC meeting, everybody's waiting for the cherry on the cake. Cut, no cut, double cut are the options. ETFs are mixed apparently. We'll look into that too. Labor cooling, disinflation slowing, consuming resilient, and anything to do with the trade war, of course, is inflationary supply risk. And as I say, if we get the 25 basis point, we should be expecting a little bit of a push up. I'm starting to dip my toe in a short. I'm not heavily invested in a short, absolutely not. It's kind of my intention. If something fails, I'm gonna take advantage. If there is some volatility, I will take advantage. If I'm wrong, I'm planning to deploy the actual trade from higher prices. Usually where we see big clouds of long-term liquidity pools together with extensions or levels of resistance on RSI 4-hour or daily. For profit taking, well, I need to see what fails. Remember that it's not only the rate cut what matters, it's not just the number, but also the speech right after. If it's dovish or hawkish, of course, it makes a huge difference. You can see here a summary in general. Take this as a template, not necessarily at what happens, but I read it as this is what the pros are expecting that everybody's gonna be thinking. And from there, things could change actually a lot. So I'm prepared for this to not necessarily play out by the letter. There's always the scenario of the sell the news as well. At least 8 more hours until we get the reading. In the meantime, we're getting the building permits and the housing starts. And a reminder, gentle one, that the Federal Reserve balance sheet has continued to come down, and it's just a valid and important data point to put on top of the FOMC meeting. If they are expecting to cut the rates so much and expecting the markets to really rally that big, why the Federal Balance Reserve is coming back down and breaking down towards a more restricted kind of economy. We keep getting all-time highs, but they are actually reducing the sizes in here. Not by a lot, but if they were expecting things to rally that much, why they are not investing like in these areas in here? Just one isolated data point to consider, not to make all your decisions based on that, of course. And we are at 779 in September, best performance intra-candle monthly since 2013. And we have formed a very, very thin CME gap that I haven't heard anybody talking about. I can see it in the 1 hour time frame, and it's located at 116.4 in premium CME, but probably if we go into Binance, that is going to be priced at around 116. And that will be too much of a conservative profit taking for my short that I enter at 117. Just 1K is almost like nothing, but in case I need to break the glass and exit, that could be one potential exit. Basically, if I'm no longer feeling like it's worth holding a short and we pinch that level to take that liquidity, and then I say, this guy is gonna bounce for sure to 125 or something, think, well, then I close in a very small profit and I start looking for a short higher. We need to look later in the video how many shorts and how many longs we have currently and if it's too overcrowded to be in a short. And yes, we have pinched overnight in here. You can see that we managed to get to that resistance of 117,500. The RSI, if we come back down in here, we are putting a bearish divergence against here. The worst scenario for this is if this breaks this white support at 50, which is located at 115.6. If that support doesn't hold and we pinch, we close below and we retest and come back down, then this is gonna be seen as a liquidity hand. It just went there maybe to grab that liquidity and then come back down. Just a potential scenario. Now, if we hold the new support immediately, which is the 116.7, the upside on the 4-hour time frame, our next resistance is at 126, where we have quite a lot of long-term liquidity pools. So that is an area I'm envisioning in case I need to drop my next short order. Why are you not in a long in such a bullish situation? I don't necessarily agree that is for granted the bullishness, and I already took advantage when I came back from holidays, entering at 110, close at 114. So I think I took a good chunk of profits there. Maybe I should have held until 116. I had stuff as well to do that day, so I took profits. But I have to say that this pattern, the way it looks like here, is like a noisy but kind of inverse head and shoulder that has the neckline at 117 and something, and could really, make another impulsive move up and put a new all-time high. There is that potential to do that, although this approach into the FOMC hasn't been perfect, right? So we didn't hold the support in a clean way, right? We faked out once, then we faked out twice, and then we moved for a third time the line, and now we are holding at that 50. If we come back in here, watch out for another fake out, but if it holds and it cannot re-enter the 51, we could go all the way to 27. 27 at the moment is 110, so there is a motivation to go there if things fail, if this is a sell the news event or anything. On the daily, we are right against resistance, and I'm going to show you later that we are also against resistance on the weekly. So two different time frames with resistance at the moment. We are piercing my level of resistance right there at 117. You can see it, and I guess it's going to either front run it prior to the FOMC and push slightly higher, or it's going to wait until we get confirmation and then push slightly higher, or we can start seeing the sell the news event straight from there doing something like this. Yeah, but Mariano, you're giving me too many scenarios. Well, trading is about that, right? There is a responsibility of putting all scenarios on top of the table, and then you marry one. I marry a small short. That is what I came up with. I'm showing you all scenarios, and then you can come up with your own thing. After all, it's your responsibility to take your own trades. To me, after this move back down in here and the recovery into 117 looks really great. Being above the CPR pivot looks bullish, but I'm not sold until we touch 119.4. At that point, the CPR model is gonna start saying that in October we are also going to pinch the first level of resistance, which is probably gonna be placed somewhere above 120, meaning that in October we could continue the way up, but first we need to pinch that 119.5. And even if we pinch that, as I left this line in here, this can still produce a C wave to the downside, and this can still be seen in the future as a bear flag. So not invalidated yet for bear flag. And as I said, the weekly is also pinching resistance. We got our resistance at 117.2, and that's precisely the level that we are testing today. Let's see how are we with leverage squeeze. Is in the middle of the range. No extreme is seen, so there is no alpha. SOPR is on the low end, very quiet in the areas where mostly people are closing in a loss. And we've seen some articles in the past few days stating that that is a fact, that many people are closing in a loss. Possibly, or it must be that there were people entering over 120, getting super excited here, and then when we are getting close to the break even, they're still closing at a loss. That's why the SOPR is closer to the low end. If it was close to this area of 1.1, I will be shouting that people are taking profits in the green. And when that happens, we get a local top. Ethereum is closer to that actually, right? So we are closer to the top band rather than the bottom band, meaning that on Ethereum people are taking profits in the green. They are not necessarily holding on to their profits. Wherever they enter in here, they were in profits, and they're starting to close it around here. I still see a balance between inflows and outflows on being well explorer, meaning that there is no reason really to state that there is a lot of outflows or a lot of inflows. outflows because they compensate. We get around 12K of outflows and around 12K of inflows in the past 1 to 2 weeks per day. If it was just one or the other, I will be stating, be careful or be greedy now because there is a lot of outflow. On Bitcoin, we still remain absolutely clean in here every single day in the green with the ETFs on spot, doing all-time highs and all of that. But it is Ethereum the one that pinched the all-time high yesterday, and it also had an outflow. So 61 that went down prior to the FOMC meeting. And that to me means that some people were considering the FOMC maybe slightly risky to be so allocated in Ethereum. After all, Ethereum overreacts whatever Bitcoin can do, and maybe they flip some of that into Bitcoin as well. Who knows? We are at 53 on Fear and Greed Index. Let's see where is the immediate short-term liquidity first. That is currently going up to 117.7 and is in the red, as you can see in here, and our support of 114 is becoming more intense. But if we zoom out again, that 107 still wins everything, even if we go with all the leverage levels. That shows 130 as quite heavy, but nothing compared to 107. Now, if we look at the long-term accumulation, that 125 is very, very heavy, and I will say it's the largest pool that we currently have across all the range of prices. Possibly followed by number 3 at 135, then 141, and then on the lower end, since we've been recently here, we cannot have that much liquidity. It's something to consider, yeah, but it's below what we see on the top end. This is a great view. That's where you can see. So maybe we take care of some business around here and then we do some more significant retracement. Short-term liquidity on CoinGlass, you can see that the liquidity has been pinched from yesterday, but it has been also growing towards where? Towards 118. And the one at 109 and 107 is still there waiting patiently for the right time. Yesterday it was the top at 107 and it didn't have anything coming closer. Now it's at 117.7, so it moved $700 higher, but now this one, 109, is becoming very close to the number that we see in there. That doesn't mean that I'm thinking, oh, we must go to 110, but it means that if something crosses in the mind of investors with some doubts during the speech or something, and this is ideally already gone, this could come back down into 109 to take that one, in which case that could be a move of 7K for me. Good. I will consider myself that deal closed and, ready to move on into maybe taking a long. Purple whales, what are they doing today? Well, they continue flat. They were at highs of 400, went to lows of 200, and currently they are about 300, a little bit higher, but still not taking the previous high of the 12th of September. The ones that are pointing up with a slightly bigger slope is the brown whales, the largest ones. Let's have a look closer so you can see what I mean. The green ones are also betting on this move up, but greens are the losers, small positions. Well, my position is probably around that size at the moment, but I wouldn't say necessarily that I am trading in the same style as those position sizes. Brown ones are definitely the larger ones, but purple ones are the ones that lead the price with a lot of accuracy. It's pointing up, but you can see it's not like they are going mental in today's trading session. Also, they change their minds very quickly as well. Let's look at the ask liquidity on top of the price. You can see that there is a lot of levels where people want to sell. The typical levels 120, 25 and 30 are still there. So let's look at this in more detail. You can see that 116 has 2K of support and there is a lot of support coming in here. I'm gonna refresh this just in case it's giving me the wrong numbers. So yeah, I think it was giving me wrong numbers. 116 is support, but then it declines very sharply. Let's look at where is the next support, 116.3. This is bouncing from the 117 recent higher high that we did, and then we got those levels of resistance at 121, the 25 and the 30. Below we have 105 and 100 and 110. And let's see how is the order book today. We have some negative funding rates as well. People entering too many shorts at that precise point where we pierce 117. I guess I enter a little bit overcrowded. We have to admit that. And we have all this liquidity pending in here. We need to look into the delta to see and quantify how much is that. And in terms of longs versus shorts, you can see that we are about to enter below 45, which is a line that I historically been seeing some resistance when there is so little number of longs after moving up. Price moving up and longs kind of pulling out too much, and eventually we get some peaks like this one, or for example in here is just a local top that moves 2.4% down. Not always is the final top, but sometimes there is just a local top because longs are pulling out. And currently we're getting very close to longs getting too little number for this just moving up. So that is a bullish alpha, but by itself is not enough as usual. We can see as well that at the close proximity of the price, 0 to 1, 1 to 2, and 2 to 5 are in the negative at the moment, meaning that there is more resistance than support, but it is from 5 to 10, 10 to 20 and beyond that we have decent in the green in those ratios. There is not a lot of bright lights in here, meaning that there is more resistance at the moment, and the wealth versus retail, the wealths are dominating at the moment with 100 percentile. Open interest is pretty high with 86 percentile, so people are trading definitely today, and so many positions are already placed. We have 200k of delta that puts the longs slightly at a larger risk, not by a lot, but let's consider it. And around 113 there is a gap there, not a gap, a big accumulation of open interest. That's where so many longs probably enter, and the price tends to come back there. Why is that? Is it dark magic? No, they entered there with open interest, so they took a futures, and people on futures pay interest for an open position, and they have doubts and psychological issues, and eventually they say, okay, I'm gonna close my long, and that attracts the price to where it started. Not guaranteed, but just another data point. Fair value gaps below the price are very thin, above the price are very thick, and I'm gonna say that being so close to these thick fair value gaps makes it very attractive. Although the last time we were next to these two ones, we didn't take them. It's just alpha, but it doesn't always play out. The next one on the top is 118, and below we have 115.9. Probably around here we have that CME gap, and then below here the 113 is where we place a lot of open interest, and at 110 there were some liquidations decent. It's always good to overlap multiple data points to see if those are really attractive. S&P and Nasdaq pre-market prices are opening slightly higher, like for example in here we have 659, well slightly below, sorry, but nothing conclusive really to say, well, this is gonna be a sell-off or a pump necessarily. We've been rallying towards the rate cut, so there is a big narrative at the moment floating across people on social networks on whether this has or not to turn into a sell the news event. If we are already pricing in with a 96% chance of a 25 basis point, if people are gonna take profits, or if they're gonna carry on pushing the indices even higher. Remember that cutting rates makes the dollar weaker, so that's why there is these two teams rallying a little bit more, but mild run because it's just 25 basis points versus we have run a lot, the second argument. Therefore there should be some sort of sell the news effect. And remember that the VIX is printing a hive. We got two hives in here, and then you get some expansion. Expansion means some correction on Nasdaq, S&P, and obviously that affecting crypto with it. DXY is still in a high in here in the RSI. I care a lot about that because turning this into a higher low and a lower high here could turn also into bullish divergence, helping us to break out and get some relief of this massive move from 110 to 96. Now I keep my eyes open because we could break this and do a breakdown from the support of 2011. That is definitely significant, and that could help potentially to get a big wave up for the rest of the year on S&P, Nasdaq, and crypto. Of course, that is not great for dollar, weakening so badly, coming from 115 and then ending up somewhere around 90 is pretty impressive, I have to say. Let's see how gold it is. Yeah, gold is just hovering around the all-time highs with just a week up. This is how we closed yesterday the market. This is very important. That's the first thing that people are gonna see as they approach the market open and the FOMC meeting. And there is kind of the reverse of what we've seen for 2 days in a row, where Nvidia and the rest of the Magnificent Seven were going up. Now it's transferred in the opposite direction. Amazon was in the negative, now it's in the positive. And we are at 76 altcoin season, so people are starting to doubt now what's going to happen with the altcoins, with the Bitcoin dominance pushing higher and potentially exiting from this 75, because that's officially the end of an altcoin season, right? We can pinch again. You know, there can be a little bit of arm wrestling, like you can go to 73 and then still put a high at 80 something. In the past we have done things like this, out and then back in. But yeah, we are 1 point away from being in the crossroad against and exiting altcoin season. This is how the crypto market is looking. looking mix is 53%, very impressive. And if I look at Bitcoin dominance, it's the same reading that I'm getting every day this week. This is like a mini double bottom that could push into 40s, 43, 46, around that area, ideally below the white line, so we get another rejection in continuation to the downside. If we re-enter the white line, that will be a very significant move. I think it's low likely, but it's possible. It's 14 points up that needs to move in percentage to get us there, and that will put the altcoin season really at risk. If we go just into 43, that's just a healthy swing up that can easily then turn into a new lower low. Good for altcoin season. Ethereum currently is trading at 4.490, which is slightly below the previous all-time high. It's kind of getting a little bit shy at this area. Remember, I'm not holding Ethereum. If you want to know my play, my views about Ethereum, watch my video from yesterday together with AVAX. I did also a video. Of course, anything that happens today with regards to the FOMC that affects Bitcoin 1 to 5% move up or down, the altcoins are going to also react. Whenever there is a big decision, there is also a spike in the Bitcoin dominance. That is just purely because people want to transfer their profits into something that is slightly less volatile than an altcoin. So if someone is on AVAX and you are already 80% up, you sell it for Bitcoin, you wait the event, and in the worst case scenario, Bitcoin corrects 5%. And once you find some sort of bottom, you can buy back the AVAX and then benefit from even a larger recovery period if Bitcoin also recovers. That's kind of the thinking behind, and that's why the Bitcoin dominance can get these spikes during big macro events. So let's do a very short summary. I am in a short at the moment, and I'm thinking that there could be an opportunity to take some profits. My level of confidence with this short, I'm gonna summarize it to you, is a small position. Being a small position translates to me not having a huge conviction in the short, otherwise it will be a large one. I am gonna scale up if we go into big areas of liquidity. Market moves in swings, and particularly in a topping year, there can be big swings with big volatility, and we can be ping-ponging between longs and shorts, or at times holding both. If you are not experienced, I will disencourage you to take any shorts if you've never taken shorts. If you've never been in trouble with a short, this should not be the first short that you ever take. Definitely high risk, lots of emotions there will be in the market. Remember that in just a few minutes we're gonna have the live stream. Do not miss it. I'll see you there. Take care. Bye bye.